In a surprising turn of events, BYJU'S is offering to pay off their $1.2 billion term loan B in less than 6 months. Now, it's important to keep in mind that this was first reported by Bloomberg, and so far it hasn't been confirmed by BYJU'S themselves, but here's what we know so far. BYJU'S has offered to pay off the first $300 million of their $1.2 billion term loan B in the next 3 months. And if their lenders okay this new strategy, then BYJU'S will be paying off the remaining $900 million in another 3 months. But how is BYJU'S planning on doing this? Because just last week we talked about how they can't even afford to pay their SaaS bills of between $5.4 and $6 million. Well, the thing is that even though BYJU'S isn't very liquid right now, they don't have a lot of cash in the bank to play with, they do have some assets that are extremely valuable if they sell them. These assets are US-based kids reading platform Epic and upskilling platform Great Learning. BYJU'S had acquired both of these companies for a total of $1.1 billion back in 2021, and these acquisitions were supposed to help them with their US expansion and also their expansion into the higher education upskilling segment, but now BYJU'S is more focused on survival, and their best bet is to sell off these assets. They're expecting to be able to sell these two businesses for a combined value between $800 million and $1 billion. It remains to be seen whether they'll be able to find a buyer. Obviously, if they're telling their lenders that they're going to be able to pay back their term loan B, then it's likely that they have found a buyer, but we're going to have to wait for the story to unfold. And of course, this is not the outcome that BYJU'S would have hoped for. They worked hard to acquire those two companies, but again, this is a game of survival at this point, and it seems like this is the only option at their disposal. Now, with any BYJU'S story, there's a little bit of good that comes with the bad, and oftentimes a lot of bad that comes with the good. So something else that happened this week with BYJU'S is that there's more information coming out now about this missing $533 million. So according to BYJU'S lenders, the company has allegedly been hiding $533 million in a hedge fund called Camshaft Capital Fund, which was founded by William C. Horton. And again, according to these allegations, these funds were transferred in 2022, this $533 million. And since those funds were transferred, a 2023 Ferrari Roma, a 2020 Lamborghini Huracan Evo, and a 2014 Rolls-Royce Wraith have been registered to Morton's name. Now, the curious thing about Camshaft is that they typically cater to clients much smaller than BYJU'S, so they actually accept as little as $50,000, and that's a really small amount for a hedge fund. Another interesting thing about Camshaft is their principal place of business, which admittedly is a great place to run a business if you happen to love pancakes, but not a great place if you're trying to store hundreds of millions of dollars. Their principal place of business is an IHOP in Miami. The Economic Times did a great report on this, where they looked into a 2020 Securities and Exchange Commission filing and found that their principal address was 285 Northwest 42nd Avenue in Miami's Little Havana district. Now, it is possible that that was Camshaft's old address and they moved out of that location and IHOP moved in, because there was a lawsuit filed by Camshaft unrelated to BYJU'S in any way back in June, and in that lawsuit some more information came out and they listed their primary address as in the Virgin Islands. You can read more about this $533 million and the whole Camshaft situation. We'll put a link to the Economic Times report in the description down below, but I just think this whole situation doesn't really bode well for BYJU'S reputation. When you're literally the largest edtech startup, the most valuable edtech company in the entire world, you don't want to be interacting with these obscure, shady hedge funds. But anyways, let's move on to some more positive news here, because a few weeks back, we made a video about the top 10 Indian AI startups, and we covered an interesting company as number 1 called Karya. We also made a reel about that company recently, and now the company's founder, Manu Chopra, was featured in Time's 100 Most Influential People in AI 2023 list. So just to summarize what Karya is doing, it's pretty easy for large companies to train their AI models on English or other large popular languages, but what about regional languages? Well, this is the problem that Karya is trying to solve. So they're going out to rural parts of India. They're asking people to record their voices. They're building data sets in regional languages. They're paying these people 400 rupees per hour for their work. And then they're providing those data sets to big companies so that they can build AI models for those languages. And the cool thing about this Time list is that Manu Chopra isn't the only Indian person on that list. There are also 2 other founders, Ramesh and Sunil Wadhwani, the founders of Wadhwani AI. This is a company building AI solutions that are specifically designed to benefit underserved communities. Their focus is on agriculture and healthcare, and one of their solutions is called Cottonase. So Cottonase is used by cotton farmers for pest control, and basically how it works is that these cotton farmers install pest traps on their farms, and once the pests are collected in these traps, the farmer will actually take a picture of these pests, and then they'll upload that onto the Cottonase app. From the photograph uploaded onto the app, the AI is able to identify the pest and also determines the level of infestation and recommends steps to end the infestation in the farmer's language. All right, next up in the news, the Karnataka cabinet seems to be hitting the brakes on the 28% GST being levied against gambling games. They've sent this draft ordinance to the legal department first for further scrutiny before it's presented in the next cabinet meeting, because this decision is actually a little bit more difficult for Karnataka than it is for other states, because a lot of these gambling game companies like Dream 11 and MPL are actually based in Bengaluru. Even Karnataka's IT minister has expressed concerns about this 28% GST, saying that it could hinder the achievement of the $1 trillion digital economy target by 2025. All right, next up, India's alternative to Twitter, Ku, is looking for buyers. Back in 2022, Ku was downloaded by almost 40 million people. That's more users than X has in India. And by July of 2022, Ku had reached a peak of 9.4 million monthly active users, which unfortunately now is down to just 3.1 million. As a result, unfortunately, they had to lay off about 30% of their workforce in April of 2023, and the company failed to make any significant revenue in the financial year of 2022. On the other hand, their losses soared to close to 200 crore rupees, and with no significant monetization plan, Ku was unable to raise funding. Now it's being reported that Ku has barely 20 crore rupees in the bank, and so, of course, the only option left available to them is looking for a strategic buyer. But anyways, let's move on now to the funding news, because this week, Indian startups raised a total of $370 million. That makes it the second best week for India's startup ecosystem in terms of fundraising in FY24. It also means that for the first time this year, Indian startups have raised more than $300 million in 2 consecutive weeks. Now, the bulk of this funding went into one company's bank account, a SaaS startup by the name of Perfios, and they raised $229 million in their Series D round, valuing them at over $900 million. Perfios helps their customers, which include banks and NBFCs, to take financial lending decisions by providing them with insights that help them to determine the creditworthiness of their potential clients. Then we have another SaaS startup, Zaggle. They offer multiple products for businesses like a prepaid card for employee spending, payroll software, and an invoice management platform, and they raised $30.5 million ahead of their IPO. Then we also have a personal hygiene brand, PSafe. They raised $3 million, which is $3 million out of a $6 million Series B round that they're in the process of raising. And then we also have a metal 3D printer manufacturer, Think Metal, and they raised $300,000 in their pre-seed round. And that is all the startup news that I have for you guys this week. I am recovering from a viral fever. I'm not sure if you guys noticed, a little bit lower energy this week, but thank you so much for watching in spite of that, and I will see you in the next one.